Hey there, investors! Today we're diving into the exciting world of the Indian stock market. It's a wild ride, full of potential. Two big names dominate the scene: the Bombay Stock Exchange, BSE, and the National Stock Exchange, NSE. They're the giants where companies go public and investors make their fortunes. Understanding these exchanges is key. Whether you're a seasoned pro or just starting out, knowing the difference between BSE and NSE is crucial. We'll break it down in simple terms. Get ready to learn about their history, their functions, and how they stack up against each other. By the end of this essay, you'll be speaking fluent stock market. You'll be able to impress your friends and maybe even make some smart investment decisions. Let's get started. First, let's rewind the clock. The BSE is the elder statesman of the Indian stock market. It was founded way back in 1875. That's right, 1875. It's the oldest stock exchange in all of Asia. Talk about experience. Now fast forward to 1992. The NSE burst onto the scene. It was India's first demutualized stock exchange. That means it's owned by investors, not brokers. Pretty cool, right? The NSE brought modern technology to the game. It introduced electronic trading to India. No more shouting on the trading floor. This was a game changer. Both exchanges have come a long way. They've witnessed India's economic transformation firsthand. From humble beginnings to global players, BSE and NSE are the heart of India's financial story. So what do these exchanges actually do? Think of them as giant marketplaces. They connect buyers and sellers of stocks. Companies list their shares on these exchanges to raise capital. Investors buy and sell these shares, hoping to make a profit. The BSE and NSE provide a platform for all this to happen. They ensure fair and transparent trading practices. They enforce rules and regulations to protect investors. They also provide a bunch of other services, like market data and research. Basically, they keep the wheels of the Indian stock market turning. They're essential for businesses to grow and for investors to participate in India's economic success story. Without them, the market would be chaos. Section 4. Keeping score, understanding SENSEX and NIFTY 50. Now let's talk indices. Think of them as scoreboards for the stock market. The BSE's benchmark index is the SENSEX. It tracks the performance of 30 of the largest and most actively traded companies listed on the BSE. The NSE's counterpart is the NIFTY 50. It follows the top 50 companies on the NSE. These indices give you a snapshot of how the overall market is doing. When these indices go up, it means the market is bullish. Investors are feeling good. When they go down, it's a bear market. Time to be cautious. Keeping an eye on SENSEX and NIFTY 50 is crucial for any investor. They're your window into the health of the Indian stock market. Section 5. BSE versus NSE, a head-to-head comparison. Okay, time for the main event. How do BSE and NSE stack up against each other? Well, both are powerhouses in their own right, but there are some key differences. The BSE has been around longer and has a larger number of listed companies. It's known for its strength in traditional industries. The NSE, on the other hand, is the more tech-savvy exchange. It boasts higher trading volumes and is a leader in derivatives trading. Ultimately, the best exchange for you depends on your individual needs and investment strategy. Do your research and choose wisely. Section 6. The backbone of an economy. The importance of BSE and NSE. Let's wrap things up by talking about the big picture. Why are the BSE and NSE so important for the Indian economy? Well, they play a vital role in fostering economic growth. They provide a platform for businesses to raise capital and expand. This creates jobs, boosts innovation, and drives economic progress. These exchanges also attract foreign investment. When international investors see a well-regulated and thriving stock market, they're more likely to invest their money in India. The BSE and NSE are not just about making money. They're about building a stronger and more prosperous India. They are the engines that power the Indian economy. Section 7. In conclusion, why you should care about BSE and NSE. There you have it. a crash course on the Bombay Stock Exchange and the National Stock Exchange. We've covered a lot of ground today, from their rich history to their crucial role in the Indian economy. Remember, *BSE is the older, larger exchange with a focus on traditional industries. NSE is the newer, tech-driven exchange with a focus on derivatives. Both are essential for India's economic growth and attract foreign investment. Whether you're a seasoned investor or just starting, understanding these exchanges is key to navigating the exciting world of the Indian stock market. Now go out there and make some smart investments. But remember, I'm just a TV personality, not a financial advisor. Always do your own research before making any investment decisions.